All right, let's talk Progressive. Today, we're going to break down their Q3 2025 report. And believe me, there's a lot to talk about. We're going to cut right through all the corporate jargon and get to what really matters. What made this quarter so incredibly powerful for them? Let's get into it.
So here's the big question, right? With everything going on in the economy, inflation, weird market swings, crazy weather, you'd think a huge insurance company would be in for a bumpy ride. But what happened with Progressive? Well, that's a different story. And the numbers? Wow, they tell a pretty amazing tale, starting right here.
12%. Now, you might see that number and think, okay, 12%, not bad. But for a company the size of Progressive, a 12% jump in the total number of policies they have year over year, that isn't just a bump. That is massive. It shows they're not just holding their own, they're aggressively taking new ground.
And in dollar terms, check this out. $63.7 billion. That's how much they've written in premiums in just the first 9 months of the year. That's billion with a B. It's just a mind-boggling number that gives you a sense of the sheer scale we're dealing with here.
Okay, so what does 12% growth actually look like in terms of people? It looks like this, 4.2 million new policies. That's how many more customers they have this year than last. I mean, to put that in perspective, that's more people than the entire population of Los Angeles. They literally added a mega city's worth of customers. It's nuts. So here's our game plan for breaking this all down. We'll start with the big picture of their super strong quarter. Then we'll peek under the hood at their personal insurance engine. That's what's really driving things. After that, we'll tackle the trickier story in their commercial business, see how they invest their cash, and finally, we'll look at the culture, the people. And yeah, we're even going to talk about cookies. Seriously. All right, let's kick things off with the fundamentals. We've seen those flashy headline numbers, but the real magic is how they all fit together. Because this isn't just about growth for growth's sake. It's about smart, profitable growth. Okay, this table lays it all out. Premiums, up a healthy 13%. Policies, up 12%. Awesome. But this last line is the real kicker. The underwriting margin. That's a fancy term for profitability. And it went up. That's huge. It means they're not just writing more policies, they're writing more profitable policies. And in the insurance world, that is the holy grail. So what's fueling this engine? Well, it's the part of the business most of us know. Personal insurance. You know, your car insurance, your home insurance. And for Progressive, this isn't just a department, it's an absolute powerhouse. Okay, quick sidebar, but this is super important. We gotta talk about something called the combined ratio. Sounds technical, I know, but it's actually pretty simple. For every dollar an insurance company brings in from premiums, how much do they pay out in claims and expenses? If that number is under 100, say 95, it means they made a 5-cent profit just on the insurance itself. It's the key scorecard for any insurer. And this is why we just talked about that. The industry target for a really, really good, profitable company is around 96. Progressive? In their biggest business, personal auto, they came in at 90.4. That isn't just good, it's elite. It means they are absolutely hitting it out of the park when it comes to profitability. So how are they so profitable, especially with all the crazy weather we've been seeing? Well, this shows you just how smart they're being. In safer, more stable markets, they're growing their home insurance business a little bit, up 2%. But in the really risky places, hurricane zones, wildfire areas, they're pulling back by a lot, down 15%. This is like a masterclass in managing risk. All right, let's switch gears and look at their commercial business, insuring trucks, small businesses, that sort of thing. And here, well, the story gets a little more nuanced. It's not quite the same slam dunk we saw on the personal side. So get this. The number of business policies they have is up 6%. Great. But the money they're actually making from those policies, that's down 6%. Wait, what? How does that even work? Well, a big piece of the puzzle is a drop in business from ride-sharing companies. Plus, they're seeing more customers opt for shorter, 6-month policies, which just bring in less cash up front. It's a tricky balancing act. Okay, so let's not forget the other way insurance companies make a ton of money. They take all our premium dollars, this giant pile of cash called the float, and they invest it. And Progressive strategy here is basically play it safe. Really, really safe. And you can see it plain as day right here. They split their investments into 2 piles. Group I, that tiny little slice, is the riskier stuff, like stocks. Group 2, the huge part, is the safe stuff, like high-quality bonds. And I mean, look at that split. A whopping 95% of their money is in the don't lose this pile.
Yeah, think of it this way. Group 2 is the solid bedrock foundation of the house, and Group 1 is maybe the fancy new TV. You make absolutely sure the foundation is solid before you splurge. This protects the money they absolutely need to pay our claims, no matter what the market is doing.
And this play it safe attitude goes for their debt too. Their debt to capital ratio, which is basically how much they owe versus how much they're worth, is super low, 16.3%. Their own internal limit is 30%, so they are way, way below that. This gives them a massive safety cushion and tons of freedom to make moves when they need to. All right, for this last part, we're going to do something a little different. We're moving away from the spreadsheets and balance sheets, and we're going to talk about people. Because in her letter, the CEO focused heavily on the company's culture. And honestly, it might just be their secret weapon. I mean, just listen to this from an employee named Tanya. I'm definitely a progressive lifer. I intend on retiring here. Wow. How often do you hear someone say that about their job these days? That's some serious loyalty, and it speaks volumes. Or this from another employee, Elisha. Progressive fosters an environment where you can be your true self. You know, when people feel like they can actually be themselves at work, they do better work. It's really as simple as that. And I love this one from Nestor. He admits the job is tough. You know, highly technical, highly regulated, but people lift each other up. That says it all, doesn't it? It's about a culture of teamwork, not just a cutthroat, numbers-driven environment. And if you think that's just some nice, fluffy talk, check out this number, 99th percentile. What's that? That's where Progressive ranked in Gallup's massive employee engagement survey. Not against other insurance companies, against all companies that Gallup surveys. That's practically unheard of. That's world class. And this culture of support doesn't just stay inside their own walls. This quote here, it's from the owner of a small bakery, Cookies by Freddie, who got a grant from Progressive. One cookie at a time. It's a little story maybe, but it shows a company that's thinking bigger than just policies and premiums. So let's wrap this all up. What's the bottom line? Progressive is firing on all cylinders. They had a monster quarter, driven by incredibly profitable growth, smart risk management, and a company culture that is just off the charts. They are absolutely crushing it today. But that brings us to the big final question. The world is changing fast. We're talking electric cars, AI, self-driving tech. How does a giant like Progressive not just keep up, but innovate to stay ahead of the curve? Now that is the real multi-billion-dollar question.